It's Thursday, March 4th, 2021. Another fascinating day on Wall Street. I took down some notes. I want to share some articles, and I just want to touch base on a few things that transpired today. Before I do, please make sure you give this video a thumbs up. Make sure that you subscribe to this channel and make sure you hit that bell notification. Also, I will be dropping another Patreon video in the next day or two, so make sure you come over to Patreon and check that out. But without further ado, let's get into what happened today. It was an interesting day yet again on Wall Street. Dow Jones closed down in the negative 345 points. What's interesting is that it was down over 720 points earlier, but fought back to close down only 345 points. But there is no manipulation, right? There's no plunge protection team. There's no Fed in these markets buying. But what a miracle that the Dow closes down only 345 points when it was down over 700. The 10-year bond yield right now, as I make this video, is sitting at 1.557. They better get this under control or big trouble. I don't know about all of you, but watching these markets, watching what's happening in the bond market, watching what's happening in this economy, something very, very wrong is taking place. Something very out of the ordinary, something just not normal about what is going on. And I don't know about you, but I am sensing something very, very big coming. Not saying that's going to happen tomorrow or next week. But look, I don't trust anything going on at this point. I don't trust these markets. I don't trust these banks. I see massive bubbles inflating. Warning, warning, warning. Something big is coming. You know, I was watching the business channels this morning. You don't have to look any farther. Look at first-time jobless claims last week. We got the number this morning. 745,000 people last week filed first-time jobless claims. This has been going on 900,000 jobless claims a week for literally a year now. And yet nobody talks about it. I watched a couple of these business channels early this morning. Nothing. I went on the website on CNBC. I couldn't even find it. I had to punch it in to finally get to the article. But it's amazing how they just sweep this kind of stuff under the rug. They don't want to talk about it. All they tell you to do is continue to buy, buy, buy. Run up your debt. Continue to buy into these giant, massive bubbles. Just spend money you don't even have. Continue to shop, go buy a car, buy more stocks, buy more Bitcoin, and it doesn't matter how you do it. Just use money you don't even have. Just continue to buy. I'm going to tell you what I'm buying, ladies and gentlemen, and I don't really care what anybody says. I don't care what anybody thinks. I don't give financial advice. I just share with all of you what I'm doing, and I read the comments down below, and I see what a lot of you are doing. You're doing this. You're buying a lot of silver. You're buying gold. This is the stuff that is on sale right now. This is not inflated. This stuff is cheap, and yet it's real. This is a real, tangible, hard asset right here. This is what a lot of people are buying right now. I looked at some of the big bullion dealers today. Premiums sky high, inventory very, very low. A lot of gold, a lot of silver is sold out. The stuff is getting harder and harder to get. And you know what? Nothing big and bad has even happened yet. Imagine what's going to happen when these markets collapse. What's going to happen when the bond market collapses, the stock market collapses, the housing market collapses? Do you think you're just going to call up SD Bullion or any of the other big bullion dealers and just order this stuff? It's not going to happen. It's already getting hard to get right now. Again, this economy is in very, very big trouble, but I shared an article yesterday on CNBC where they talked about GDP going to be at 10% this quarter. The economy's on fire. How can the economy be on fire? I mean, this is right in the article. Economy on fire. GDP 10+%. How can an economy be on fire when you're losing over 700,000 jobs, not a month, a week? For a year. 745,000 first-time jobless claims last week again. I mean, this is so repetitive. It's almost the norm now. We're so conditioned that this is normal that it doesn't even matter. It's no big deal. CNBC, U.S. weekly jobless claims total 745,000 versus 750,000 estimate. So that's the good news of the day for people who say that I'm doom and gloom and I don't have any good news for you. Well, here's the good news today. We only lost 745,000 jobs last week instead of the estimate of 750,000. So there's your good news today. Let's talk about this relief bill. $350 billion bailout to states, cities, and counties. Here's the biggest bailouts right here by state. California will get $42 billion. Now remember, if you're lucky, you will get $1,400. California will get $42 billion. Texas, $27 billion. New York, $23 billion. Tribal governments will get $20 billion. Florida will get $17 billion. Illinois will get $13 billion. Pennsylvania, $13 billion. Ohio, $11 billion. Michigan, $10 billion. New Jersey will get $10 billion. So many of these states, not all, but many states who squandered their money just basically ripped off the taxpayer, they're going to get rewarded. And I'm not saying this is all states, but I can definitely tell you, California, New York, Illinois, these are states that just absolutely squandered money, spent more than they had while they were shaking down their taxpayers. LA County, right out here, our county, LA County, not my county, but LA County, will get $2 billion. Just the county alone will get $2 billion. Cook County in Illinois will get $1 billion. These are a couple of the worst run counties in America, and they're going to be rewarded. Some of the most fraudulent, misrun counties and cities in America are going to be rewarded the most. Santa Clarita, this is one of the most wealthy counties in America. It's located in the heart of Silicon Valley. They're going to get $385 million. What do they need $385 million? It's one of the wealthiest counties in America, and they're going to get a bailout of $385 million, while you get, if you're lucky, you get $1,400. So again, there's counties and cities that don't even need this money that are going to get it. And we've got states and counties who have completely abused the checkbook, robbed the taxpayer, and they're going to be rewarded. In my opinion, some of these people who did this should be in prison, and yet they're going to be rewarded. Their cities and their states and their counties will be rewarded, ladies and gentlemen. So let's talk a little bit more about debt. Here's another article today, this on the hedge. So just how concerned should you be about America's $28 trillion debt? We just passed $28 trillion in debt, but people will tell you and I, people are going to write me in the comments down below and tell me that there's nothing to worry about, that the economy is doing just fine. Don't worry about $28 trillion in debt. I found this really fascinating. I looked this up today. It would take you 31.7 thousand years just to count to $1 trillion, ladies and gentlemen. Let me repeat that. It would take 31.7 thousand years to count to $1 trillion. And we are spending billions and hundreds of billions and trillions of dollars like it's nothing. Just think about that. 31.7 thousand years to count to just $1 trillion. We're now $28 trillion in debt, and we're close to $200 trillion of debt if you count unfunded liabilities like Medicare, Medicaid, our pension crisis. We're looking at 277 in global debt. This is really getting scary, ladies and gentlemen, and I hope all of you are paying attention to what is going on. This market volatility, these magic tricks that we're watching take place on the stock market, all these zombie companies, 4,000 cryptocurrencies, people literally just gambling on cryptocurrencies, people gambling on the Robinhood accounts, people just gambling on Wall Street. It's going to end bad, ladies and gentlemen. It's going to end bad. Don't listen to me. I don't give financial advice. I'm just telling you what I think, and I'm telling you right now, I'm walking the walk, I'm preparing. I'm buying more gold, more silver, I'm putting some cash away, even though cash, I believe, is on borrowed time, but you gotta have some cash. I've made sure that I've paid down all my debts, and I have really very, very little debt. But look, this is really, really getting concerning. And we're going to wake up one day and we're going to be in another world. There's no doubt about it. Michael Snyder. Does anyone even care that the U.S. national debt will soon cross $30 trillion? And this was a good article by Michael Snyder. Just think he's brilliant. According to the Bureau of Economic Analysts, U.S. GDP declined to $20.93 trillion in 2020. So once our national debt crosses 30 trillion, our debt to GDP ratio will be surging around 150%. Let's talk about this relief bill. $422 billion is going to go to stimulus checks. $246 billion will go to extending additional unemployment funding. That's the additional $400 a week. Where are the jobs? Where's the opportunity? We are creating so much debt. $246 billion going to extending additional unemployment funding to $400 a week. Is this really going to fix the problem? So if you add 422 and 246, that comes to $668 billion. So think about where the rest of this money is going. $668 billion is going to be going to your checks and your unemployment benefits. Where's the rest of it going? Remember, the total is 1.9 trillion. This is only 668 billion. It's going to be going to bridges, underground railroads, language preservation, environmental justice grants. None of this extra money is going to go to helping you or the average American who really needs help. What we really need is not free money. What we really need is well-paying jobs. We need opportunity. That's what we need. We need people getting back to 40-hour work weeks, earning real wages. We need production. We need manufacturing back here in America. And just if you're just going to pay people $1,400 to sit at home, or if you're going to pay people $400 extra a week plus unemployment to sit at home, I don't see what that is going to produce except more debt and more people just looking for a handout. I don't understand. CNBC. This is shocking right here. Monthly auto loan payments surged to record highs as borrowing hits biggest one-year jump. You know, if things were doing so great, why would people need to borrow so much money? If things were so great, why would our debt now be $28 trillion? If things were so great, why are they going to have to pump in another $1.9 trillion of stimulus? If things were so great, how come interest rates are at zero? If things were so great, how come 40 to 50 million people are out of work? If things were so great, how come first-time jobless claims last week were 745,000? If things were so great, how come we are losing 900,000 jobs a week, et cetera, et cetera, et cetera? These people who keep telling me that everything is okay, just buy Bitcoin and take all your money and go into the stock market and you'll be fine. These people are completely delusional, they're out of touch, and these are the people who are going to lose. The average monthly payment for a new car is now approaching $600. And I think that we have 40 to 50 million people out of work. We have people now barely living paycheck to paycheck. We have people losing everything. We have people 6, 7, 8, 10 months, a year behind on rent, 3 million homes in forbearance. And I'm looking here at new car loans. The average monthly payment, $600. Those taking out loans to buy a new vehicle borrowed an average of $35,228, an increase of almost $2,000 from a year ago. People are borrowing more than ever before. Look at those payday loan companies. They're everywhere. They're popping up everywhere. Why do you think that is? Because the economy is doing so great? Because people are making so much money at work because their massive wage increases? No. Loans for used vehicles also hit all-time highs. People are borrowing on average for a used vehicle, a used car, $24,467 on average. And while people are accumulating more debt, oil today over $64 a barrel, and food prices are soaring. Yet, people are going to write me in the comments and tell me that there's no inflation. Inflation's maybe 2%, right? Wrong. We all know inflation is 8, 9, 10%, maybe even more where you live. I'm seeing gas today. I just passed my local gas station, which is a Arco. $3.55 for regular. Last week in LA, I saw 2 gas stations over $5 for regular. So another 745,000 people lost their jobs last week. Many of these people now have a crisis on their hands. And the answer is a stimulus check. An answer is extending unemployment. How long does this go on, and how much more damage is this going to cause to the US dollar? Because we're going to have to print a lot more money. If you think it's all going to end here with the $1.9 trillion relief bill, you're sadly mistaken. This is just the first one of 2021. More is coming. And we are watching more and more money printing take place, and we are watching the markets get into more and more trouble. Bonds are heating up. We are not seeing the same type of effect when the Fed would come in and promise more money printing, more debt creation. They're not getting the same effect. They're continuing to have to give more drugs to the patient here to keep all this going on. Over 18 million Americans are still on government jobless benefits. I think this is a very conservative number. You can't even believe the numbers anymore. But I read yesterday, 50 million Americans are getting some sort of government subsidy, while 18 million Americans are still on government jobless benefits. So what a healthy economy. Is this all heading in the right direction? Are there not going to be any repercussions from all these moratoriums, from the forbearances, from all these people now dependent on unemployment claims, unemployment extensions, more unemployment benefits? What kind of repercussions do you think this is going to have on the US dollar, your purchasing power, on the economy? So again, let me reiterate. The Fed is printing massive amounts of money. Take a look at the economy. Take a look at how many people are losing their job on a weekly basis. Take a look at how many people are unemployed right now. Take a look at how many people are dependent on government subsidies. Take a look at the debt and deficits. Take a look at reality, ladies and gentlemen. The medicine is not working like it once did. $1.9 trillion coming. The next one's going to have to be bigger, and the next one will be bigger, and the next one will be bigger until it no longer has an effect. And look, I think the Fed's in big trouble. Some people think that they're not, that they're just going to take over the entire world, and this is a plan. Maybe it is, but maybe it isn't. I think the Fed is getting themselves into a corner here. We're at 0% interest rates, so they could go negative, yes, but I don't think that that's going to have the effect that they would like. So the other option is keep printing money until the money doesn't work. And so this is why it's so important, I believe, to be owning hard tangible assets, not to be putting everything into US dollars. And again, a lot of people heading into cryptos, believing that they're getting out of the system. But the more I look at it, I think that the more you're getting into cryptos, the more into the system you're getting. You're buying more into the system. I want to close with this today. The Fed has created a dependency. The stock market is not dependent on the real economy. The stock market is not dependent on a outlook or a forecast. It is not dependent on jobless numbers or unemployment. The stock market now is 110% dependent on the Federal Reserve creating massive amounts of debt, creating money out of thin air, keeping it on life support. We are in a time now where investors and money managers have only seen a one-way street. Now, many of these investors and money managers are beginning to get a little bit nervous. They're seeing the volatility. They're watching the bond market heating up. They're beginning to get a little bit nervous. They're beginning to see that the medicine is wearing off. It's not having the same effect on the patient. Cheap, abundant money is not working like it once did, ladies and gentlemen. It's getting weaker and weaker and weaker. And sooner or later, the Fed will have no more weapons, no more tools to fight off what's coming. That is a global collapse. That is hyperinflation. That is all-out economic chaos. Make sure you're preparing. This is no time to be gambling. This is the time to hunker down, get the debts paid off, make sure you're holding tangible, hard assets, in my opinion. Get ready, because you're going to wake up one morning and it's going to be a whole new world, and millions and millions and millions and millions and millions of people are going to be wiped out. These investors and these money managers who told you everything was going to be fine, just keep investing. Larry Kudlow today coming out, buy everything, buy the dip, buy everything, and just hold it for a long time. This is not the answer. This is going to get you wiped out. Be cautious and be preparing. God bless you all. Look forward to talking to all of you very soon. Share this video.